Look at gold. Another day, another record price for gold. Right now, it's trading at 1,059.40. We made another new record today in gold. The question is, why are investors flocking to the precious metals, and what does that mean for the economy? Let's ask Jay Taylor. He's the CEO of Taylor Money, Hard Money Advisors. Sir, there's so many reasons why gold might be going up. Some people say inflation. I say, nah, forget inflation. Yeah. There's no inflation. Some people say the dollar. Yeah, maybe. My 2 cents says people are flocking to gold because of the massive debt that we're taking on as an economy, as an administration. What do you say?
Absolutely. That's exactly right. People are losing confidence in paper money because of this debt. Remember, with fiat money, debt is the raw material from which money is created. If you don't have a gold-backed system or a commodity-backed system,
Jay, just take us,
yeah.
Take us one step at a time.
Right.
Talk about fiat currency. What is fiat currency?
Fiat currency is currency by law. The markets haven't decided that we should have dollars as our currency. Rather, government has mandated, has forced us to use paper as money rather than freely choosing to use gold as a medium of exchange, for example.
So now we've moved away from the gold backing our dollars, so therefore it can what? What happens?
So we can have unlimited numbers of dollars created, which means that each dollar is worth less. Every time you increase the supply of something, the price goes down. So what is happening? It's not that gold is going up so much in value. It's that the paper money is losing its value because we're creating endless amounts of it to bail out the world, essentially.
Jay, I get this, I've been talking about gold for a long time, and I get the email just about every single night, maybe 4 or 5 of them saying, hey, yeah, but $1,060, that's too much, right? What do you think?
No, not at all. If you look at inflation-adjusted gold price, it's not anywhere near where it was in 1980. Moreover, nobody knows how much more money is going to be created because, as I just said, there's no limit to the amount of money that can be created. When Nixon took us off the gold standard, the international gold standard, in 1971, he paved the way for endless amounts of problems, inflation or deflation. Either one could happen, could result, in my view, from the enormous amount of money and debt, as you put it, that's been created, especially since 1971. If you go back and look at the charts, you'll see an explosion of M3, all the measurements of money.
Too much in the weeds. Let's bring it back. Let's talk about $11.8, $11.9 trillion
right.
in debt. We're in debt as a country. We keep
right.
borrowing money from China,
right.
Middle Eastern sovereign wealth funds, et cetera, et cetera. Is this part of why gold is making new highs almost every day?
Absolutely, because that debt is not being paid for by savings. That debt is, and China is saying, we've had enough of your money, we've had enough of your debt. So where's the savings going to come from? It's monetization of debt, the printing of money to buy the debt. The Federal Reserve has said they're doing it.
I'm pointing, Jay, right here. Give me the first one, you guys, if you don't mind. Here's the total national debt right here, $11.8, $11.9 trillion. That's per person, per American, right there, $39,000. And that doesn't include unfunded things like Medicare commitments. So it's a lot more. There it is, $11.9 trillion. We're going to approach $12 trillion as a country. Our other people, our investors saying, we're worried about your monetary and fiscal policy, so you better get your house in order. What happens if nothing changes?
Well, if nothing changes, we're going to have a breakdown of the system. I think what gold is telling us now, as it's rising every day to new highs, is that there's a lack of confidence in the system. The system is going to break down because it's insolvent. You said you're not worried about inflation. I would agree with you. I think we have a potential deflationary collapse here, implosion, if you will. Something similar to what we saw last fall, but worse than that, possibly, because if you look at debt is growing exponentially. You mentioned 12 trillion. If you look at the total amount of debt in the United States, private sector, local governments, and all of that, it's like 43 trillion.
Let me cut you off here. We're going to run out of time. I want to talk to the people who are watching right now. Everyone might not be able to afford to buy, a big gold mining stock. What's the best way for a small investor to get involved in gold?
Sure, I think they can certainly go into CEF is one of my favorite investments. It's a gold and silver investment. You can buy it just like a stock, or they can buy mutual funds that buy gold through the mining companies. Mining companies is the area that I cover in my newsletter, and that's where I think you can make an awful lot of money.
What's my gold coin going to do?
Well, that's going to go up versus paper. I can guarantee that.
And I have a Kruger in here as well. So, and by the way, this is an ounce of gold, about maybe a couple of bucks over the spot price of gold, trading at $1,059 an ounce. You can also buy a quarter ounce.
Yes, you can.
You can buy a half ounce. Even a tenth of an ounce, you can get very, very small coins. All right, Jay, it's your company, Taylor Hard Money Advisors. That's the newsletter. You also have a company named?
Well, they can reach me at miningstocks.com and learn more about my newsletter called Jay Taylor's Gold, Energy, and Tech Stocks.
All right, Jay Taylor, thank you very much.
Thank you.